Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate with host Glenn Sutherland.
Welcome to a new episode of A Canadian Investing in the U.S. with Glenn Sutherland. This week, my repeat guest is Brooke Shang. Brooke, for people who didn't catch the last episode, you want to give everybody a bit of a background, who you are, and then we'll get into this.
Sure. Actually, Glenn, your podcast was the very first podcast that I did.
Awesome.
I kind of started to want to get myself out there. So I reached out to you like, Glenn, can I get on your podcast? And that's the beginning of many, many podcasts, by the way. And I started investing by now. It's almost 8 years now. And I started by investing in my backyard, basically Ontario. And since it didn't work out very well in terms of cash flow, property value versus rent, etc., I started to explore other provinces.
Yep.
And even meeting Glenn and other investors, I started to invest in US as well, mostly passive. And I started by focusing on lease option and rental. That was our last podcast, actually.
Yeah.
And now even the rentals or multifamilies, a lot of the projects are now out of Ontario. I'm getting out of the market. I still have probably only 2 or 3 here. That's it. And I'm mostly in Alberta right now. And also passively investing as private lenders or mortgages for other investors.
Yeah, that's awesome. Well, maybe let's talk a little bit about Alberta, and then we'll talk a little bit about, passive investing in the U.S. And I don't know, maybe even have a few tips for people who are interested in passive investing. But so you left, or mostly have left Ontario. I don't know if you have any left in Ontario, and you're now looking at
two more rentals in our home. I think, yeah, that's it.
So, because you're kind of saying it was like the numbers that weren't working. Was the landlord board working for you? Was that what kind of was it just that you couldn't make the numbers work to make it cash flow, or like why leave Ontario?
So Landlord-Tenant Board was definitely an issue. I think for a period of three years or 4 years, I constantly have a case with Landlord-Tenant Board waiting for hearing. So that basically only ended, I would say, middle of this year. Like all the cases are done. It didn't make sense because of that for sure.
Yeah.
And I don't want to sound very negative. However, that's part of doing business. Then I realized, hey, it's really hard to collect. And all the cases I had, the verdict is in my favor. It's still hard to collect because they move on, or you finally found out where they work. It's hard to garnish the wage, or even knowing they own a car. How do you put a lien on it, et cetera, et cetera? It's difficult in Ontario. That's one thing. And then when I started, a lot of people are focusing on BRRRR. So buy a single family, make a duplex, triplex.
Yeah.
Still, people are focusing on that, adding a garden suite. However, if you think about it, the property value is high. And even though you can refinance, once you refinance, basically your cash flow is gone because then you tag on a higher mortgage amount.
Yeah.
So that doesn't make sense. And the rent, for example, even if you get over $2,000 a unit, your property is now worth $800,000 or so, for example.
Yeah.
So you can imagine how much mortgage is on it after you refinance. Yeah.
Yeah.
So that doesn't make sense. Yeah.
So you were doing that? Is that? I'm just like thinking back to whenever I saw you in person last, and I remember when we were going. There was like a house, like a block or something, or 2 blocks from your actual residence that you were looking at buying. Did you ever do that project?
I'm right here. That's my home right now.
Oh, so you moved to that one?
I did.
Oh,
so
awesome.
That's right. I moved to, so we thought about putting up our old home, which is only 2 blocks from here, for Airbnb. I got the license. Actually, it wasn't as hard as I thought.
Yeah.
And you probably are aware of it since you're in Ontario. Then the Airbnb law kept changing. Even now, they're still chasing me to say, hey, renew your license, pay your fee. I cancel my license, etc. So even that didn't make sense. So we sold that property and we only kept 2. The thing is, if the tenants are in good standing, they pay, it's hard to take the property back and then sell it on the market. I think a lot of people experience that too.
Yeah,
so,
unless you're actually going to move into it and legitimately move into it. It's like, I know that's one of the ways I've heard people actually pulling it off, but if you have a family and everything, that's not really doable. Like I can't imagine moving my whole family into the unit in order to try to to get
Try
it
to
to go
figure
and
out
get
sell
yourself
it.
in a lot of trouble if you lie. If you lie.
Yeah. So that's hard. And I know even some people are buying their property. Even at closing, they thought, hey, the current resident should move out. They didn't. You still have to go through the process. So that wouldn't make sense for me.
Yeah. So okay. So then you're like, okay, I'm Ontario's not making the numbers work. And then
Mhm.
you I know you have some business partners out in Alberta. Is that what drew you to Alberta? Or because I know a lot of times I hear about Alberta, I hear about New Brunswick, I hear about, when Ontario
Mhm.
Westers are going out and staying in Canada. Is that what drew you to Alberta, or why Alberta? Why did you go out there?
That's one of the reasons, mainly because the number works at the time. Right now, I think Alberta is also getting expensive and it's getting also competitive. So multiple offers, sometimes you still see that.
Yeah.
Having partner, yes, and also the number works. Um, I invested in Winnipeg before, and the state really doesn't really matter which market. And I still have investments in Asia, but that's because my family is there. That was kind of
Yeah.
just happened. We sometimes say accidental landlord. That's sort of the case. Yeah.
I wasn't even planning on talking about that, but that's actually really interesting. So so for the stuff in Asia, you became like your family owned it and then someone moved out and then you started renting the property. What's different over there than doing this in, say, Canada or the US?
So I still have citizenship in Taiwan, for example. So
Yeah.
we're kind of being considered part of China. So
Yep.
for us to go to China, we basically just have an ID that says we're local, but we're from Taiwan. So we can still buy property and live there, basically. Accidental me being because that's a while ago. My parents actually wanted to retire in China.
Yeah.
So they bought a property where they want to stay. Then there's another property there, and their friend was supposed to buy it. They didn't, so my sister and I ended up having our names on the property. We're never there, so we hired a property management company to turn it into Airbnb. It's very different there. You kind of give them the control. They'll guarantee a certain rent, and they'll put up another room, put in the furniture, renovate it the way they want it, and it's actually quite passive compared to managing Airbnb yourself.
I have a couple questions. So I personally can't buy there, right? You have to have a
It's
connection
difficult.
to the
Yeah,
country.
yeah.
Okay. So I can buy there. But what about the price points? If I had the ability to buy there, do you find it's like expensive, it's cheap? Like what and or I guess you're also using Canadian dollars, so does the exchange rate help?
It's exchange rate like now versus as we're speaking, Canadian dollar is really weak, right? So if Glenn, you're investing in the US, it helps, yay, right? Yeah. So same thing there. We actually use US dollars to purchase at the time. However, if you look at the market today, same thing as what I talked about. The property value versus the rent wouldn't make sense. We purchased it a while ago because Asians' mindset is that, hey, I'm buying a property, I might pass it down to my kids. As long as some of the expenses are covered, then I'm okay. So you can imagine if that's the mindset, it's usually hard to cash flow.
Right.
Yeah. Like even people here, I was watching CBC documentary on people buying condo. And at first people are only thinking about covering the mortgage. And they think, okay, that's enough. Somebody's covering my mortgage. They forgot there's property tax and definitely very high maintenance fee when it's a condo.
Oh yeah.
Yeah. So it wouldn't make sense, I would say, because the property value is high. So you're not really leveraging your money.
Okay. And that's one of those things that makes me always just even think about like what real estate's going to look like in the future. If nothing cash flows, I think it's going to be a lot harder for people to be in real estate, right? Like
Yeah.
that makes the lower barrier of entry if you can have someone cover all these expenses, and it makes it so that it's a lot more scalable, that you can go, refinance, buy another one, maybe do some flips. But if you don't cash flow, it's going to be tough to continue to do that. It might be a game for the rich, or you're just playing this long game, which is kind of crazy. Hello, everybody. Thanks for listening to the podcast. I just wanted to let you know that I've created a new coaching program. I believe the new coaching program has way more value than any of the programs that have even existed in the past. What we've done is pre-recorded all the lessons so that you can work through it at your own pace, which is pretty cool. And then we're going to meet up on a regular basis to answer the questions, do deal analysis, and actually spend our time together working on things instead of spending our time learning things. I think this will make a seamless transition to buying in the United States and will help you solve a lot of your problems. If this is of interest to you, go to glensutherland.com/coaching. I hope to help you guys invest in the United States, and I hope we provide as much value as possible. Back to the podcast. Anyway.
Yeah. Wouldn't you say that's a case for a lot of multifamilies too? You kind of have to stabilize it. However, a lot of the times you have to get creative. So creative financing has to be a part of your deal, vendor take back, or you have to find different ways, private, whatever it is, or your stabilization period. What if you are not able to rent out during that time?
Yeah. No, yeah. It's a lot to think about. And like this, who knows what it's going to look like in years. If you can hold on to these, you might do really well. So maybe I'll pivot a little bit since this is a podcast about investing in the US. So you do some investing in the US, but you do it on the more of the passive side. So let's talk about that, because there's like a million different ways you could passively invest. Like you could do a prom note, you could register as a mortgage, you could go into like a REIT, you could go into a syndication, you could go into a fund. What kind of what's your interest level in investing in the US right now?
Right now, ever since the beginning, ever since I started investing in US, I was always passive. So started being partners with people doing flips, Florida, Ohio, and then later on Phoenix. So for the flips, I put the money in, and at first it was equity. So basically whatever is sold, we share the profit. That's how we started. And then later on, it's more like lending.
Yeah,
I think you and I started our relationship that way, learning about lending and how to passively invest as a lender.
Yeah.
And then later on, so for Phoenix is second mortgage. And then for the current investment is limited partnerships.
Okay. So there's a lot of questions there. So say you're going to go into a second mortgage position because you're basically going to be going higher leverage than the bank was willing to go to, or they just didn't want to do the refinance and it had to make sense to move to private money. What, as a private lender, are there certain things you're looking for in the deal or from the operator before you go and invest your money in there?
Yeah, so definitely I look at the partner's experience. I will say the deal I did then, I probably wouldn't do it again. So the return at that time was 18%. So it was pretty good. At the same time, I've seen things go south, not for my deal. Yeah. However, when the market when you're not familiar with the market or volatile, you have to be careful. So I have done promissory notes before. However, I don't do that anymore. I really think that's risky. I'm lucky, by the way. So far, none of the promissory note went south. I lost money on a multi, but that was in Canada. That's probably my first multi and being passive as an investor. Then I realized, hey, it's really risky. I started small. I think at the time, for example, Canadian dollar in that case, the Canadian investment. It's not a lot. I lost that. And then I realized, hey, you have to start to look at more secure investments. So yes, more with people I trust. I will be honest, when I started, I wanted to have some experience on my resume. So I got into the deal. I wanted to learn how you do in the States or how other people do in different provinces. Yeah. I will start to partner up with them. Then actually even now, a lot of people focusing on flip or having promissory notes. They're in trouble. They're hoping it will turn around, etc. So I'm seeing a lot of examples. I'm not encouraging people to do promissory notes at all anymore. Even if I have to put up the fees to register with a lawyer, I would.
Yeah. No, I agree. And I've seen like a lot of people with like a promissory note, for people who are listening, is when you basically are loaning the money, you get a contract for that money back, but it's really not secured against anything. It's the person's promise to pay it back. I think everyone who even has had ones that didn't work out, like the operator didn't work out, I think they probably had full intentions to pay it back at the start, but markets changed. They couldn't get their sale price. Stuff happened and money just wasn't there. And they got themselves into trouble. And what I believe Brooke is trying to say is when we're doing, like she said, you wanted to secure this, you want it secured against something. And so
Mhm.
like having, your actual note like registered as a mortgage on the property, there's actually something you're investing in. Like it's not a promissory that you believe in this person to pay you back. You're actually on a mortgage. When they go to sell that property, that mortgage has to be paid off. And if it's in first
Yeah.
position, it has to be paid off first. I have more free content. So if you're interested, I created a PDF guide and a video to go along with the PDF guide to complement it. And what the guide is all about is the 5 most common mistakes that Canadians make when investing in the United States. So if you're interested in this free guide, go to canadianinvestingintheusa.com/mistakes. And let's go back to the podcast. And it's free. So
Mhm. So yeah, Glenn, thank you for pointing that out because for people who haven't done it before, a mortgage, you're just like the bank. So you're registered on title. When they sell it, they'll see it. There's a lien on it. A promissory note just saying, I promise to pay. And that's it. And in Alberta, it's easier to register the lien. That's also another reason. I think in Ontario, it's hard to operate. So if any lawyer is listening to this, and I've spoken to a few lawyers, it's next to impossible to register a promissory note in Ontario. And I talked to a lawyer 2 days ago. He was saying, you think if there's a guarantor on the promissory note, you have some extra guarantee. It's actually the opposite, because if something goes wrong, the guarantor and the borrower will start to argue saying, hey, you put me on this, you're putting me on this. Then it's going to drag the litigation time. That's something I didn't know. So you have to look at, okay, how many people is involved? If it's getting complicated, it's even going to be harder to get your money back. So you have to think, okay, in terms of risk, what am I willing to do? So I know, Glenn, you and I, we both have students. So sometimes I'm not going to say, don't do anything. And investor, you really want to get into a deal. So a lot of the things you might overlook. So I mentioned, even for me in the beginning, I look at some of the earlier deals that I've done. It's really risky. I just wanted to have something on my resume. However, later on, I learned, and that's also part of our tuition, our experiences too.
yeah.
Then we realized, hey, that's not the most secure way to do it, and there are other ways. Then with more experience, you realize, hey, there's also more opportunities. You have to know how to structure it. You have to know where to go. You go to Florida, Ohio, wherever the market could be and could work.
Yeah, and if you're being the passive investor, you should be looking at the actual deal that you're investing in too.
Oh yeah.
Because
Yeah.
you know what, it's crazy. People like they go and rate shop and then they just get someone who offers the most and they just go with that. And you ask them about the deal or where the property is, and sometimes they have no idea. It's just like a crazy promissory note, and you're like, everything works out until it doesn't work out. So, be your
Yeah.
own, do your own due diligence, like
Yeah.
understand what they're doing, because you'll understand the risk of the project then too, because you're like, hey, he's doing this. And if everything works out perfectly, he's only going to make this much after paying me and whoever else that's in this, that, like this might not work out. And then even if you're doing like, say, a prom note, and it's not really secured against anything, you're just promising to that company, the you might be bailing out another project is what's happening, and you're actually putting yourself in more risk
Yeah.
doing this. I actually did a bunch of calls over this last year with people who've done prom notes and got themselves in trouble, and they were Ontario doing Ontario but they were like, that's why they reached out. They're like, how do we do this in the US? And you were talking about securing the notes on the property, and you said it was easier to secure in Alberta. And I found, because I tried to do it in Ontario as well to secure the notes, and it's expensive. It was really expensive to get a lawyer to secure it, even one of the notes against my principal residence in order to accept money from somebody else, because I want to make it secure for someone else. But it's a lot easier to do in the US. It's like costing me like $150 to secure this in first position in most states. Like it's gonna be attorney fees are all different everywhere. But
Right.
anyway, kind of going on a thing. You mentioned you're going into second position, which like I kind of touched on. It would be slightly more risky because you're going higher than what the bank believed the leverage was acceptable for that person in most cases. Is there a certain leverage rate that you're comfortable going up to?
Mostly depending on the project. If it's not because you look at what's the after repair value, right? And how much work they're going to do, how much more they need to put the money in. So usually if you're not looking at that, you don't want to drag too long in case you have to renovate, etc. I would say 75% loan to value, including second, if you want to be safe.
Okay.
Yeah.
Yeah, no, that makes a lot of sense because you're investing in a second position for a property that's having a renovation done on it. You're not just going into second position on like a buy and hold that's already been stabilized, because that's going to be extra risky, right?
Yeah. So, for example, the example you were giving me is like, for example, they have equity on their home.
Yeah.
Once you lend them the money, they can say, I work on this project, but they got the money, they can do whatever. Right? Yeah. So if the project doesn't work, if they have equity, for example, in their home because they paid down the mortgage with only 50% loan to value, meaning there's 50% equity, I'm willing to put a second on that house, their home, for them to work on another project. As long as it's secure, the loan to value makes sense. Yeah.
And then whenever you're, because I know that different private lenders will have different criteria, do you do an appraisal? Do you get like a realtor to do a comparative market analysis? Do you just pull comps yourself? What level should you go to on making sure of the ARV or the after repair value?
If you have doubts, definitely hire an appraiser. It's not a lot, a few $100s. Same thing as if you want to register on title. If it, like you said, $150 or just the lawyer fee, go for it. A lot of the times, like you said, do your own market research. How are they going to pay you back? And a lot of the times, if it's a active market, you can pull the comps yourself. I would just do that because a lot of appraisers, they really just look at comps, right? That's it.
Yeah, exactly.
Yeah.
I have one appraiser in Ohio, and they were disabled, and they weren't able to go up the stairs, and to go into the property, it was like, I don't know why they had a job as an appraiser, but they had the job of just going up the 4 steps to go in and do it, and they couldn't do that, so they like just did it all on photos, which is just, they didn't even walk into the property. So, you might be not getting any better value depending from hiring an appraisal, or you might be getting someone who goes through and actually has some, is noticing condition and other things of this house, right? Because they do vary, right? What's been updated and what hasn't, and what the shape of everything is, right? And the age of electrical and stuff. Anyway.
Or inspection report. That's something I actually would prefer to look at because what needs to be done and things like that. So, for example, you and I, we invest remotely. Unlikely we're going to walk through the properties ourselves. And even with the banks, surprisingly, we qualify for a mortgage. So under corporation, but we personally guarantee, for example, they didn't walk through the property because I know they didn't go. And they didn't call my realtor or anybody to say, we're going to come and do an appraisal. And on my mortgage statement, I just saw appraisal fee. I'm like, what did they appraise it? So even with the bigger lenders, they probably still wouldn't walk through. And that's common. Even during COVID, they started to drive through. I don't know if they actually drive through. However, it's not as extensive as I would have imagined.
Yeah, no, a lot of times they're just basing it on what other people have sold their properties for.
Yeah, exactly.
Space. Yeah. Awesome. Is there anything I should have asked you about being passive or investing in the US or Alberta or anywhere else?
And just as we were speaking, I'm thinking about how do we add value to the listener or people who want to invest remotely, really look at different markets. And I recently being asked, I'm not there. And if the deal maker or my partner have been in that market, they said that did their due diligence. Should I still do my own and look at the market and market research? I would say yes, because one of the promissory notes I did earlier in the year, even though it looks like they have experiences, they flipped and they sold a few, so it's active. However, I got out. But if you look at the comps or the population growth, it's actually declining. I think that's a sign, especially when you're flipping. If the market is going down, people are moving out and they have several projects on the go, then maybe you should do some market research to realize, hey, population is actually not growing. When you are flipping and looking for appreciation, that might not be the best place to go.
Yeah, because I mean, also mean that that person might take longer to sell that property, which means that
Exactly.
it might take longer for you to get your money back than they originally forecasted if they haven't planned for that accordingly.
Yeah. And we kind of talked about it before we started the podcast. Things like, okay, what's the law litigation? What is it like? Or even landlord-tenant board, what it is like if you plan to hold long term, right? So yes, there's housing issues in certain markets. Well, because the tenant lot is not for the landlord who want to invest there.
Yeah.
So things like that, make sure you do your market research. Does it make sense? Even though it's not there, for example, rent control, it might not be there for certain markets. Is it going to be in place pretty soon? It might be in the news. So do some research and look for it.
Oh yeah, definitely. Totally agree. Brooke, these are awesome tips for anyone who's looking to be passive investing. I think that I think this will help people do some safer investing instead of I like to use the term cowboying it and hoping it all works out. Just some things to check. Brooke, if people wanted to find you to learn about you, how do they go and do that?
My name, Brooke Shang, is the only one in any social media so far. Even though Chinese have similar last names, surprisingly, not a lot of Brooke for Asians. Awesome. So anyways, so it's awesome. If you look for Brooke Shang, it's me on all the social media. So easiest way, look me up in social media.
Awesome. Whenever I go look up Glenn Sutherland, there's like 1 million of them. No, that's awesome. Thank you for coming on the show, Brooke. I really appreciate it.
Thank you, Glenn.
That was a nice video. Bye.